Alrighty, it's November. I don't know. It's November something. November 10th. Took a future trade this morning. My bias was bullish because when I marked out this green line down here was actually, I think I marked it on the NQ. So initially, my bias was bullish because I saw on the daily that the gap had been filled for NQ. It's going to be hard for me to pull up everything. Oh, here we go. So we had this whole bearish news last week, right? And that was cool. That was cool. Every gap that we had that needed to be filled, every fair value, whatever, I think had been filled, especially on NQ. It was clear, had been filled. And so I marked this PDC as previous day close. And so I try to mark previous day closes and when the market opens, especially being that today is a Monday. So I marked when it opens Sunday with this green line. So I look at both NQ and ES or NAS and SPY to determine, to help me determine movement. And I also look at the daily for each one to determine where I think money is going to move towards. So even though I know for me this would be considered, a break of structure down to the downside, we're bearish. For the day, I was expecting us to be bullish. When would that happen? No idea. So it's hard for me to do it on my phone, but I look at both NQ and ES, and I look for SMT divergence to confirm my moves. Now, the frustrating thing about SMT divergence to me is that it's going to confirm whichever one you're interested in. That sounds cool, but it essentially means I have to know what sentiment I'm willing to stick to regardless of anything else. So for me, my sentiment was bullish because of the way the candle closed and open on the daily, being that it opened here from yesterday. My goal was that I'm going to be bullish. That was my sentiment. Whether or not, I know I'm in a downward, I'm in a bearish market right now, but I felt today would be bullish because of how the candle opened and closed Sunday evening. So because I'm expecting bullish, what I'm looking for is SMT bullish sentiment. So I'm looking for essentially lower lows and higher lows on both ES and NQ. But I also, just being transparent, also found higher highs and lower highs and higher highs, which can be confusing because it doesn't make sense. If I'm going to look at bullish, I need to stick to bullish sentiment regardless. And then it's just a reminder too that the market will move up and down and sideways. So you could be trading with a friend, which I don't think people do that, but if you could be trading with a friend and their sentiment could be bullish, yours could be bearish on the same instrument, and the both of you could be correct. It just depends on when the market wants to show that. It could be in the beginning of the day, it can be in the, whenever. So because you can see here, my little yellow dashes are my SMT divergence. So and it's equal on the NQ. So these are like, okay, yeah, I'm definitely gonna be bullish, rah rah rah. But up here, I also have it marked as possible bearish. So I really just kind of confused myself with that, which was dumb. Okay, so basically, market opened here on this black line, and so in my mind, I said, well, if a market opens and price goes up, this is gonna take out previous highs or old highs. And if I'm looking for liquidity, then I'm going to expect a reversal. So I was like, okay, so maybe my bullish is no longer, or is currently not going to be applied just yet. Maybe we're going to be bearish. In addition to that, if I know that on the high time frame I'm going up, I have all these lower draws on liquidity, like these lower spots here that the market will want to take out before it's going to end up going back up. Well, I was impatient. And I kind of still thought I would still be bullish somewhere over here, basically. And so I entered in and obviously got stopped out. And that's when we reversed. I was able to benefit from the reversal. And it did hit my take profit, which was this London low. So I got out and I waited for us to reverse back up. You see my my long position here. I'm obviously too early. I was also doing other things in two meetings trying to take a trade at the same time. So I definitely entered in too early. I was not patient enough. Actually, if I had put my given myself a little bit more room, because based on my stop loss here, I obviously got stopped out by this candle here, this particular green candle. Had I drawn this out a little bit, I would have stayed in and it would have been amazing. But that's not what happened. So I ended up getting stopped out, and then I took a nap sometime, and then I woke up here. I was like, should I get into a trade? Should I not? Because at this point, I'm basically down $400 somewhere. But clearly I went back in the trade, and you can see it's active right now, 400. I didn't go back in for the money. I really just want to perfect my strategy. So I went back in here, and I've been bullish this entire time. My initial take profit got hit here, this black line here, which is great. But overall, I mean, all these black lines that I have, marked out here are for high time frame draws on liquidity. And so I'm not going to be shocked if we pull up any higher than this, but I'm also realistic about how much the market moves. And I measure the amount of handles that the market moves each day. And we don't move any more than like 3 to 4, 500. 300 to 400 for S&P, maybe NQ moves, maybe 600 on a really good day. Like last week, bearish market was crazy. A lot of handle movements happened. Today there was no news, so volume didn't move as, volatility really wasn't there. It was there kind of for NQ, but not really for ES. But ultimately, I took, 1, 2, 3 trades. My first trade did not work out in my favor, but however, my last 2 did. I'm still in red because my second trade that I took was I went very low. I think I did 1 contract MES, just that. This one I went in 4 contracts and I added a 5th, so that I took out and I went into a 5th contract. So 5 contracts in MES. And the reason why I chose MES over NQ was because I saw it as my leading at some point. When I was looking at the SMT divergence and I was looking at what direction we're going to be going in, this particular one on the high time frame compared to the NQ was actually a lower low. This was almost like relatively equal lows. This is what I used to say, yeah, my ES is going to be, not only am I going to be bullish for the day, confirmed, but my ES is going to be leading because it's already kind of going in the direction of bullish versus the NQ was giving lower lows. But of course, here it doesn't make any sense because here I do have a lower low where I think NQ probably had a higher low. Yep. So it's like, yeah, I could have easily just gone for NQ itself, but I stuck to ES because ES, for its own reason, despite it having a higher volume than NQ, the volatility is not as crazy, and I'm wanting to be a little bit more controlled and consistent. NQ will get you where you want to be, but it's a little scatterbrained the way it moves. Also, I noticed when I did take the bearish trade, I noticed that it initially did not take out this London low at the same time that ES did. ES definitely came down, swept London low. It wasn't even like a conversation. It did it twice. Came down, took it out, and I was out. But at the time that it took it out, NQ was still sort of like here, floating, right? So in my head, I was like, yeah, this is more confirmation again for me to just stick with ES. ES is less crazy volatile. It's more predictable. It's a little bit smoother. It's like the mature instrument. I don't find myself like my heart skipping a beat every time it moves, especially during macros time periods. So ES, I'm glad I went with it for this trade, and I will end up now downsizing my position. It looks like we're entering into another macros because the volume is kind of pushing a little bit here in ES, but ultimately this has been my profit so far, and that's been my trade for today.